Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. Please forgive me for the background music. This will go on. I cannot stop it because I'm in a hotel right now, spending my amazing holiday, 3 days holidays in central London. But I thought that okay, I have some time after my breakfast, amazing breakfast. So I thought that okay, let's make a short and crisp video on Tesla's Q4 earnings and why Tesla is ballooned, why it's going higher and higher. Okay, so let's cover this quite quickly. So I've made some notes just to be short and crisp and some bullet points I've noted. So first, let's talk about Tesla's EPS, which advanced 40% to $1.19. So this was an earnings beat, guys. Okay, revenue grew by 37% to $24.32 billion in Q4. Amazing, isn't it? So for the full year, revenue increased by 51% to $81.46 billion. Now, for all those Tesla's beers who were like criticizing Tesla that 50% year-over-year growth is not sustainable, they still managed to grow by 51% despite of the China's factory lockdowns, production issues and component shortage issues. Okay, still, so but they missed on the revenue estimates from Wall Street. So earnings were beaten, but revenue was not. But still, the thing for me as an investor is 51% year-over-year growth, which means clearly that the top line is amazing, and that means they are able to acquire a large chunk of the market share. So earnings ballooned, like I said, 80% to $4.7 per share, topping Wall Street expectations. And this is what is quite important. Revenue estimations were not being able to beat. So revenue estimations were not beaten, but 51% year-over-year growth is far more than enough for me, guys, as an investor and for a company which is profitable, yeah, has amazing margins, yeah, and still growing like a fresh startup or a growth business. This is the best combination ever. And if in one of the quarters, they were not able to beat the revenue estimates from Wall Street analysts, I don't care. What I care about is they are still able to acquire a large market chunk of the EV industry by growing by 51% year over year. Okay, now the next point is quite amazing. Tesla had already announced its deliveries hit a record of 405,000 vehicles in the fourth quarter. 405,000 vehicles in the fourth quarter. This was a record quarter. Okay, so revenue is growing at a rate above 50% year over year, and then they are making record quarters, guys. What else do you need? Now, the deliveries also swelled 40% to 1.3 million vehicles in 2022. Whole year, 1.3 million vehicles in 2022. Now, there were some negatives from the earnings report, which according to me are negatives. So the first point is Tesla unit sales came in at 1.3 million, for 2022, which is still up by 40%. So even in this negative point, there is a positive factor that it was still up by 40%. Versus 2021, if we compare with 2021, the target was actually 50% to grow or deliver the vehicles at a rate of 50%, but they could not at 50%, so it was 40%. So this is one of the negatives which the bears might use against Tesla, but in my opinion, guys, it's still amazing. 1.3 million vehicles on the road from Tesla. Seriously, they are dominating the market. And the second negative catalyst was, let's say not a catalyst, but the negative point or negative factor from Tesla was that Elon Musk did not mention buybacks, which many of the bulls or let's say short-term traders were expecting. Yeah, see guys, you are definitely not buying a company because of its buybacks. Okay, yeah, buybacks do influence your DCF model and your future valuation. It's amazing if a company has enough cash to do buybacks like Alphabet, Amazon, yeah. But Elon Musk also mentioned about recession, and in recession, guys, I have no problem if a company is not doing buybacks and investing the money back into the business rather than taking debt and doing the buybacks. This is bullshit in my opinion. This is pure BS. Okay, so I have no problems with Tesla doing no buybacks in 2023 because the recession is coming, and in fact if they use this positive cash flow to invest back into the business, which they have really amazing future products coming on, which I will get on to in a few moments, and they would like to invest in those, I have no problem, guys. We are thinking about 2030, 2035, 10 to 15 years from now, and I do believe that at some point they will start the buybacks, but now I don't care, okay? So those were the only two negative points in my opinion, which I think would have impacted the stock price, but as we can see, it has not, and Tesla is now at $160, $170 at the time of making this video. Again, guys, this is short term, okay? I don't bother about this price surge. I would have loved if the price stayed at $100 so that I could accumulate more shares. I'm thinking long term, 2030, and this could also be a bull trap. Yeah, price can again come down, and I would love it, to be honest, to acquire some more shares. Okay, anyways, so now some upcoming catalysts which could affect the stock price in a positive way for all those investors who are waiting for a good stock price. I mean, who are invested and want the price to go up. So they are planning to ramp up the production, yeah, from Berlin, Austin, and Texas plants. And Tesla's overall production capacity is now well above 450,000 vehicles a quarter. Whew, really. I'm literally sweating live right now because of this particular thing. Now, the second thing, meanwhile, the Cybertruck is slated to arrive in 2023. Now, this is what I'm talking about. If they are planning to invest more money into this project and more projects, I have no problem if they are not doing any buybacks, okay? My money is being taken care by Tesla to invest into such projects. See, guys, think like that. You would like to invest into a company who is doing good, right? So Tesla is using your money, yeah, and they are investing into their future growth. Isn't that amazing? Okay, anyway, so Cybertruck is slated to arrive in 2023, which would be Tesla's first new model since Model Y since 2020. Okay, then Tesla also began deliveries its long-haul semi-truck, and they have already decided to deliver to Pepsi, okay, in December. Now, it's unclear how many semi-trucks will be produced in 2023. Yeah, that's quite unclear. Because we still are not very well aware about the prices and the price factor what Tesla will be putting in. And Tesla is planning to build a $3.5 billion manufacturing facility in northern Nevada for semi-trucks, according to the Nevada Independent. If this would happen, guys, this will be freaking amazing, really. So now let's talk about some forecasts. So Tesla plans to grow its production volume as quickly as possible to align with its 50% annual compound growth rate. Yeah, the goal dates back to 2021. For 2023, Tesla said it expects to produce around 1.8 million vehicles, an increase of 37% compared to 2022. Now, Tesla is being conservative. In my opinion, 1.8 million vehicles would be, yeah, they will definitely achieve it. They will, in my opinion, I think they could even do 2.2, 2.3 million vehicles, but they are being conservative, you know, because, and it's good, yeah, because investors are really trashing the stock because, first of all, it's not them, it's not Elon Musk, it's investors who are thinking so high of Tesla that they are even buying Tesla at a premium, like high premium, yeah, at a price to earnings ratio of 100, 150. And then they blame Tesla when they cannot deliver. They are doing amazing. They are doing above 50% year over year, guys. What else do you expect? But they expect Tesla to grow by 100% year over year. Guys, this is not sustainable. This is not sustainable. 50% they are already doing. So please don't have so unrealistic hopes from a company, okay? Let them be at peace, okay? So that's why Tesla is now becoming an underdog and say, okay, we will be doing 1.8 million vehicles, because they think that they will surely do 1.8, and then investors are happy, Tesla is happy, and the stock price is happy. So this, I think, they will easily achieve. The other forecast is that Tesla also announced that Cybertruck remains on track to begin production later this year, like I already mentioned, but Musk conceded volume production may not happen until 2024. So volume production might not happen in 2024, but the release might happen in 2023. Okay, so please don't misunderstand this and just think, oh my god, it didn't happen. Please, guys, please, it's, you are already like betting on a company which is going to grow and will give you 5x, 10x returns. Even now, those who bought at $100 or $110 are easily up by 30-40%. So what else do you expect? Then sell and invest into some other company which you think is much better than Tesla. Okay, now the last point is the company added that its next generation vehicle platform is under development. The next generation vehicle platform is under development, and additional details would be shared at its Investors Day on March 1st, 2023. And now this is the other point which I was talking about. They are investing heavily into their own future and therefore your future. So don't just clinch onto one point that, oh, buybacks were not announced. Please, this is how you should be looking into a company, that they are investing into their own growth and their positive cash flow. And look at their balance sheet, $20 billion in assets and negligible debt. It's amazing, guys. They are the ones who will really resist recession, easily can pass through recession, and even in recession, they will grow. Now, many people are talking about their margins. Oh, they have reduced the prices and they have like reduced the prices by 50% in China and all this. Guys, compare their margins with GM, Ford, Volkswagen, one of the biggest, Toyota, automobile manufacturers, automobile makers, okay? Compare the margins. They have, Tesla has 2x, 3x higher margins than these companies. They can easily afford to do this, that, to do price reductions, price cuts in their vehicles. They have that ability. They can afford that, and they are not doing this because of the market. They want to do that. They have the upper hand. The other automobile makers cannot. They don't have margins. They don't have that slab to cut down on their margins, to cut down the prices and therefore cut down on their margins. So in my opinion, this is an amazing business, guys, and I am still buying Tesla on dollar cost averaging basis. I was really excited to see the $100 price, and I wish that it can go back to that level so I can, collect some more shares, and that just keep it aside and not to touch it until 2030, 2035. But anyways, I will still keep buying it until it is, let's say, below $200. $200 makes it a bit expensive, but if I consider the forward price to earnings ratio, it is quite cheap, okay? Not the current, not the trailing, not the current, but the forward price to earnings ratio. So that's it, guys. I hope you found this content valuable, and if you did, then please hit that like button and subscribe to the channel for such crisp, short, up to the point videos. I'll see you in the next one. Until then, stay safe, stay happy, and ciao.